Welcome to the exploration of private funding and partnerships in real estate investing. In this lecture, we delve into alternative financing methods and collaborative ventures that significantly shape the landscape of real estate investments. Private funding as an alternative. In our first segment, we investigate private funding as a distinctive alternative in real estate financing. The process involves securing funds from private investors, offering unique benefits to investors. Benefits. Flexibility. Private funding provides a level of flexibility unparalleled in traditional financing. Investors can tailor financial arrangements based on mutually agreed terms, enhancing adaptability to project requirements. Expediency. One of the key advantages is expedited decision-making and approval processes. Private funding often allows for quicker turnaround times compared to the more bureaucratic processes of traditional financing institutions. Customization. Private funding fosters creative and personalized financing solutions. This flexibility allows investors to structure deals that align with the specific needs of both parties. Real estate partnerships. In our next segment, we conduct an in-depth exploration of the operational dynamics within real estate partnerships. We evaluate the advantages and challenges inherent in these collaborative ventures. Advantages. Resource diversification. Real estate partnerships enable resource diversification. Partners aggregate financial and expertise resources, facilitating larger-scale projects that might be challenging for individual investors. Risk mitigation. Partnerships disperse risks among collaborators, resulting in a more balanced investment portfolio. This risk-sharing mechanism provides a level of security for each partner involved. Joint decision-making. Collaborative ventures involve joint decision-making processes, fostering shared responsibilities. Partners work together to make critical decisions, bringing diverse perspectives to the table. Challenges. Decision-making complexities. Challenges can arise from decision-making complexities. Varied perspectives among partners may lead to potential conflicts that need to be navigated. Profit distribution negotiations. Negotiating fair and equitable profit-sharing terms is another challenge. Partners need to agree on how profits will be distributed, a process that requires careful consideration and negotiation. Dependency factors. Managing dependencies on the commitment and performance of each partner is crucial. The success of the partnership relies on the active and engaged participation of all involved. Diverse investment strategies with private funding and partnerships. In this segment, we analyze the multifaceted nature of investment strategies facilitated by private funding and partnerships. Let's conduct a comparative analysis of returns and risks associated with different financing approaches. Private funding. Equity financing. Private funding allows for equity financing, where investors contribute capital in exchange for ownership stakes. This structure provides investors with a share in the ownership and potential profits of the real estate venture. Debt financing. On the other hand, private funding can take the form of debt financing. In this scenario, private loans are provided with pre-agreed terms and interest rates, offering flexibility in structuring repayment plans. Real estate partnerships. Joint ventures. Real estate partnerships enable joint ventures where collaborators undertake collaborative projects with shared responsibilities and decision-making. This approach combines the strengths of each partner for mutual success. Limited partnerships. Limited partnerships involve partners who contribute capital with limited operational involvement. This structure allows passive investors to participate in real estate ventures without actively managing day-to-day operations. General partnerships. General partnerships represent a scenario where partners share equal responsibility and risk in both investment and management. This structure requires active participation from all partners in decision-making and operations. As we conclude this exploration, I express my sincere appreciation for your engagement. If you found this content valuable, please demonstrate your support by liking, sharing for broader dissemination, and subscribing for access to additional insightful academic content. Thank you, and until next time.